inflation, and certainly we cannot talk about the economy in 2023 without talking about inflation. It has trended lower throughout the year. One common question we get from clients is, you keep saying inflation is going down, but prices aren't going down. And it's really important to remember that as inflation comes down, that doesn't mean prices are going to go down. It just means that they're not going to go up by as much. So that's just something to keep in mind as we're thinking about disinflation versus deflation. Disinflation being inflation coming down, deflation being actually like prices are coming down. Jason, I'm going to put this out to you first, but what do you think is happening with inflation from here? We've heard sort of it may be harder to get to the Fed's target 2% from here than it has been, to get to the 3.2% we're at today from where we started the year.
Yeah, so I'm going to build on what you shared about the difference between price level and price growth, because I think it's an important distinction. And I've heard that question asked a lot lately as well. So when we talk about inflation, really these inflation baskets like CPI and PCE, we have to make that distinction between price level and price growth. Price level is the accumulation of price growth over time. So for example, since the start of the pandemic, overall CPI, which is the Consumer Price Index, is the most highly watched inflation gauge, that's up about 19% from the start of the pandemic over the course of the second half of 2020, all of 21, 22, and now most of 23. This is the inflation that we feel when spending and doing our household budgets. It's the reality that a tall cup of Starbucks drip coffee is about $1 more today than before the pandemic. And these things add up and they are noticed. And yet, despite how unlikable inflation's general march higher can be, moderately rising prices over time is a sign of a healthy and well-balanced economy. So we want some inflation. Deflation, as you said, Liz, is bad. Ask Japan. And it's why many central banks have explicit inflation targets that are relatively gentle, like the Fed has a 2% inflation target that was created under Ben Bernanke 15 years ago. So that brings us to the price growth rate side of inflation. And when it's around target levels, the goal is for that to persist. That's the Fed's goal, is to keep inflation well balanced. When it's elevated, like it's been over the past couple of years, we want it to fall. And that's the disinflation that Liz just mentioned. And the good news is, and Doug spoke to this a moment ago with the most recent CPI, is that it is falling. Some context. In June of 2022, headline CPI was running north of 9% year over year. Today, with the most recent report we received yesterday, it's running at just over 3%. So we've reduced our inflation problem by nearly 2/3. And there are a variety of causes for the drop of inflation: normalization, Fed policy, supply chains being unclogged, goods demand coming down. There's a lot of reasons why we've seen this disinflation. But the overall message here is that it's subsiding. And of course, we welcome that.
And depending on the denominator you use, it's actually more than 2/3, because we're aiming for a 2% inflation rate. So if we're at just over 3 and we're aiming for 2, we don't have that far to go. When we were at 9, we had 7% to get to 2. So funny math, but it does highlight that a lot has been done to bring inflation back under control.